There's a question about what is the fiscal stimulation, particularly in the U.S. economy, going on right now. Actually, just today there was a announcement from the U.S. Budget Group, the Congressional Budget Office, which noted that the deficit in this fiscal year is about 300 billion, give or take, higher than what it was in the previous fiscal year. The big picture is sort of relative to the size of the economy. The U.S. has run relatively stable deficits over the course of the last couple of years. The peak fiscal expansion occurred in the beginning on a rolling 12-month basis, happened in the start of 2021, and since then we've had a decline in the size of the deficit, and have had a relatively stable deficit as a percent of the economy for the last 3 or 4 years, for the last 3 years. And so I think there's real questions about what that'll look like in a next administration. We'll find out a little bit more about that over the course of the next couple months with the U.S. election getting a little bit clearer, hopefully. But for now, fiscal stimulus has basically been flat. I think it's important to recognize from a growth rate perspective, a flat fiscal stimulus means that while deficits are relatively elevated, certainly in comparison to the strength of the economy where we are in a cyclical position, the fact that the fiscal deficit remains relatively constant means that it's not a meaningful driver of growth. And the reason why that is that in order to get a positive growth stimulus, it's supporting the level of output, but in order to get a positive growth stimulus, you actually have to have increasing deficits, which translate to increased spending for the government and the private sector. And we haven't seen that. We haven't really seen that for 3+ years. In fact, over the course of the last 4 years, we've seen a contraction in the fiscal position of the U.S. And so what's going on in terms of what's driving the incremental growth in the economy, it's income growth. It's not debt growth by the public sector. It's not debt growth by the private sector. It's income growth. And I often talk about an income-driven expansion, and I think it's important. Many people will say, well, it's the fiscal position that's actually driving the expansion. If this constant deficit or a very slight deterioration in dollar terms of the deficit over the course of the last year or two is not a meaningful driver of what's going on with U.S. growth.